Greetings all, Ben here from East West. We're going to have a look at gold this week and see what we can see in the markets. Now I'll just start off here looking at the DXY again, and once again someone did point out to me that and thank you very much to that person if you are watching this video for the comment. I always enjoy reading all the comments and interacting with you. So if you've got some sort of point of view or something you want to point out, then please leave a comment. I read them all and I will respond. So just looking at this, I mean, the reason I look at this is this is the correlation coefficient here, and you can see that the dollar index is negatively this is the correlation against gold. There are periods, of course, where gold and the US dollar move, and this is the dollar index. So I think it's always very important to point that out, because this is obviously the strength of the US dollar against a basket of currencies, mainly the yen and the euro, but it's the best proxy I've got. It is basically negatively correlated. The point here is that just because the US dollar goes down doesn't mean that gold's necessarily going to go up. But all I would suggest is that when you're sort of trading gold with a bit of a view, you got to look at which way is the US dollar sort of basically trending, and you're probably better odds of getting a good trade away if you're buying gold when the US dollar is trending down, and vice versa. It's not a guarantee. It's just probably a way to make your odds a little bit more attractive in that sense. But I digress, and we just move away from that. So it looks pretty delicately poised here, just in the dollar index. I'm just looking at the size of the swings and the duration, and they're pretty similar in terms of this one was a little bit shorter in time and price than this swing, but this downswing here, there's nothing too definitive, but I'm wondering if this downswing is finished yet. So to me, I would still be hanging off that the US dollar is in a downtrend, and even like the PCE numbers that came out today have confirmed that, there is, whilst there are still some things going on the Fed doesn't like, that there's still some evidence that I still think the rate cuts aren't coming this year, but you can't rule it out. But there's obviously evidence, both ways. So I think it'll, and I think the general idea is that the next move will be down. There's not going to be any more hikes, so that can't be ruled out. But whilst the market is basically thinking, okay, well, maybe we're not going to get cuts as quickly as we want, we know they're coming. So to me, the problem is, of course, the rider on that, of course, is Europe, and they're probably going to cut rates before the States. But nonetheless, so we know we held this retracement, but we're just kind of struggling to push away from it, okay? And when we come in and have a look at this on a closer sense, off this last measured move pivot, I mean, everything looked pretty good when it sort of got here and started moving away. But then, of course, we had the rip back. We've just touched above it. Does it wreck the trade? It probably just makes it a little less attractive. But, what I just see here is that the market is just basically, look, we've basically got two lows here and two highs. Okay, so that's not, obviously it's not perfect, but we're kind of just stuck in this box, right? So we're looking for resolution here. But when I see this to me looks like an unsure market. So I don't know which way the trend's going. I mean, I've got a general picture that the overall trend's going that way, but right now I'm not sure. I'm waiting for the dollar index to either get outside this box, come back down here and test this and maybe break it, or the other way around is that we start going up and breaking that high. And if we do that, then we can sort of start to think, okay, well, look, this is probably a new trend like that forming, but I'm less inclined to think that. I'm more inclined to think that this is probably headed lower, but we will see. However, the main point here about the US dollar this week, or the dollar index, is that it just looks a little bit sideways. I'm just waiting for a bit more resolution before the short-term movement of the dollar, colours my view of what I think gold's doing. So with that being said, let's have a look at gold. So we had a look at this previously, but we had, as we've talked about, we had the great run. We had a little bit of a pullback. We just made a new high, but since then we're sort of struggling a bit, right? So the market, the momentum in the market is just waned somewhat. And what we have done here, it's just a little early warning sign, is that we've just made a little higher pivot, or a lower pivot high there, and we've just tickled below the last minor pivot low. So that's why the candles have now started going red, because it just means that the trend is starting to turn away from the market a little bit. So let's just, in the same vein, let's just go in and have a look at this, because the one thing I look at here is like, okay, well, this looks a little bit rangy just in the short term, but are we going to break down from that? So just to quickly recap, gold played a really nice game of measured move ball here. So, there was one there that went up. That was quite good. If we go to the next pivot, we got another one here that got to target and got through second target. So when we come off this pivot, then I mean, that's not really one there, but then we broke. Okay, so that sort of measured move, stepping stones up is done. But on the way back down here, we really haven't had any sort of relief. I mean, you could sort of argue that this was one. So really, yeah, I mean, I'm going to come down here to an hourly. Really, there hasn't been a lot of trade to sort of structure here. So, the same thing sort of happened here, right? We've gone into this sort of little bit of a sideways sort of chop, and then obviously we broke down, and then we're in the same sort of thing here, but just on a larger scale. So far, you could kind of argue that the bottom here is holding, but it looks a little bit weaker, all right? Because I'm just sort of seeing now, a little bit lower. So it is in danger of slipping away a little bit. But remember, the way that the US dollar looks, I'm just on the lookout for an opportunity to get long, but I'm not seeing one here just in the here and now, because like even coming off this big pivot here, we kind of we're through the retracement zones. There's not really anything being offered to us, or at least to me, on that side of the market. So we know we've got the bigger zone down here, but DAC 2216, I mean, can we get back down there? Well, sure. I mean, nothing's impossible in a market. It can go up, down, or sideways. It's the three options, and anything can happen. So really, I'd be thinking about these lows down here. So what is that? Just 2280, sort of around there. That would be obviously just the next point of call, because if we sort of hold here, if we get down there, and that flies in the face of what's just said about the US dollar, but if we get down there, well, then all of a sudden I'd start to be thinking about a bigger range like that, and are we going to start to just track a little bit like this? I mean, like I said, I'm still looking for long. So I think what I'd be doing is if the market, just because I'm looking for longs, it doesn't mean I'm going to charge in a buy. I'll be looking for evidence that it's time to go long. Okay, that'd be the way I'd be looking at it. But certainly if this cracks, there's room for a short-term trade back down to here. But I think just for me, on risk-reward, it may be not as good. So, I think the point of call would be, because like I said, this just hasn't really retraced at all. It just hasn't been able to climb back. So, look, if this breaks, then I'd be looking for that. Okay, but I'm kind of, that's what I'm looking for. That's what I'm sort of anticipating will happen. But I'm very aware that this could happen. So if that happens, then I'll just sit back and go, okay, well, let's just wait and see. That doesn't look ideal, but it would just then open the question about the bottom of the range, and are we going to hold that? If we can hold that and then start, this is what I'd be looking for. If it holds that and then it can start to trend away like that, then all of a sudden I'm interested again. Okay, I'm thinking, okay, well, I'm now looking for the next run back up to at least test there. That would be how I'd play gold at this stage. So yeah, I'm pretty neutral. I'm just waiting for the next move. I don't think there's too much more to say about it at the moment. I just wait for this to resolve and to see if we're going to test the bottom here, or if we can break up, retest this range, and then go higher. So just quickly looking at GDX here, and same sort of thing, right? We kind of are holding the retracement here, but we've had this little period. Maybe we just switch this to a daily here. We've just had this little period of trying to consolidate after it's sort of just touched into the zone. So remember that we went to a line chart just to help us define this trend channel, and it is still more or less holding. Let's just make it with markers. So if we sort of line that up, it's more or less still holding that structure, but it's just, obviously, we're just starting to struggle a little bit here, and probably we need gold itself to kick on to really give this a kick. So at the moment, though, we've got to be careful, because this would look like, you could certainly make the argument that we've had a bit of a fake break above that level there. So as we go back to candles, this will make more sense. This was the gap that we filled and we also had a test here. But now we've just sort of deviated above that and we've come back. So right now it's just still on the edge. It's just balancing for me. But, this is obviously just looks like hesitation because gold is not really moving the way that we would hope. So let's just see how this resolves. But so far, like I said, I think for me, as long as it's okay if it retests here, but as long as it doesn't start to slip down here, if it starts slipping down here below sort of $34.20, I'm starting to think, well, if it did get down there, well, what I'd see is that you would have this. Okay, that would be just a basic trend going on, and the problem that you would have then is, because you always got to look at this stuff coming back the other way, is that we held the retracement on the other side. So that becomes your battle zone, right? So, the bulls just wanted to get it sort of above here, above this sort of 36.40, but the bears will want to get it, at least back through the old low, which is kind of here at $34. What's that? 65, 66. But if I was a bear, I'd want to see it back through here, through this sort of 34.20. And once it starts, you can see here that the measured move is still there. So maybe that is a short-term correction into the measured move just through the 61.8. And then we go. But time will tell on that one. We can't really see into the future, sadly. We just read what we can see on the hard right edge, and that is where we sit at the moment. So a little bit of a trend out. Maybe there's a little bit more to come. But like I said, I think the US dollar looks ready to slide off a bit further. So whether or not that's going to put a floor under the metals and push them back up again and help this stay buoyant, time will tell. But for now, we remain in the trend. We've held the larger retracement. We've just got a little battle zone here that we need to get through for price to expand a bit further, but we're not there yet. So that's it for this week. Thanks for watching, and I'll see you in the next video. Bye for now.